Let's get into a couple of topics today. One, of course, we'll take a look at the probability cycle of the ETF. Is it going to happen next Monday, the 8th? Now we're past the new year, so we are in the zone at this point of the ETF being approved. I think the timing will be very critical. And if you think about what's happening with Chair Gensler, we have to think about whether or not he's going to pull something out of a hat. So we'll kind of dive into this for sure today. I want to thank our sponsor, and that is Tangem. Visit Tangem.com. You, of course, can get into self-custody wallets there. And one of the things that I like about Tangem is its flexibility. One, it's got a great app. And, when you think about hardware wallets, I think one of the greatest things about hardware wallets is the flexibility and the convenience factor. And that's one of the things that Tangem really brings. So just hit the Get Tangem button. It'll take you over to the 3-card set or the 2-card set. Get the 3 cards so you've got that extra backup when you need it. All right. Just use our link down below if you guys want to help the channel out. All right, a couple of things I want to hit on. And the first, of course, is none other than Mr. Jim Cramer.
No, there won't be an ETF. But I do think that the people who are in it for that are going to use that as a chance to sell. But this thing is, you can't kill it.
No, you can't.
And the late Charlie Munger, who was so brilliant on so many things, was blind to this. Now you can say, wait a second, maybe it's all going to come
Jamie
unravel.
Dimon has not spared any negative words.
No, but look, I mean, it's a reality and it's a technological marvel, and I think people have to start recognizing that it's here to stay. The SEC's been against it almost the whole time.
Yeah.
Now that doesn't mean that every one of these is here to stay, but I do think that this is a remarkable comeback that was unexpected.
All right, so remarkable comeback. I don't know that it was a comeback. I think this was always in the cards in terms of just how crypto would continue its proliferation throughout society. And it has put itself, I think, in the catbird seat right now. Obviously, we've seen this already showcased just right after the first of the year. Everybody kind of got past that point of, one, capital gains, the other issue with any kind of tax loss harvesting, strategic things that happened toward that end of the year that I think dampened Bitcoin's move. And then also the point we're at right now, which is right at that 45K. And I think that's the thing that everybody's looking at as to whether or not it can hold what it may do right into an ETF approval. Here was an article, Bitcoin price breaking the 45K, just days ahead of the ETF approval. A couple of points I wanted to focus in on. Let me zoom in on that. A rapid climb on from 42,000 on Jan 1st, so 6%, which is, for Bitcoin, that's a move. That's a big move. We have seen others like it, but the market, of course, is gearing up for the SEC to potentially approve for one of the 14 outstanding applications that, of course, filed for the ETFs. Now, remember what Cramer said. And sometimes I think, Cramer, I take him with a grain of salt. I think he means well. He's been around the markets for quite some time. A lot of these guys are missing this stuff. It's like when you go back and look at a lot of the banks that were looking at where the S&P would be by end of year. Every bank estimate out there in 2023 missed it by a landslide. So I don't know that there's really any, special magic here. It is just pure and simple adoption that has started to take place. And remember that Bitcoin and a lot of these crypto products are starting to gain ground in other places outside the United States. So this is another one. Here's my friend over at Wolf of All Streets. This is Scott Melker predicting Bitcoin could shoot as high as 54 in the days following. If we get a 50 plus figure, I'd love to get you guys' feedback. Do you think that a 50 plus Bitcoin would cause a major sell-off in terms of people that have been in Bitcoin just taking some profits here early in the year? Or is this one of those scenarios where we will see a continuation? I feel like there's going to be a little bit of a correction, but let me know what you guys think down in the comments below. By the way, if you're not subscribed to the channel, make sure it takes some time right now. Just hit that little subscribe button. It's going to help you learn a lot more about what's happening in the crypto markets, but also get us into your feed from an algorithm standpoint. Hopefully you'll get a little bit more of our content coming to you guys for sure. Kobe Easy comes in, breaking Bitcoin now trending above 45, first time since April of 22. It puts Bitcoin up 175% over the last year, 210% above its November 22 low. That is a significant investment run, which I think a lot of people out there right now have been shaking their heads about what's happening in crypto here recently. And it also kind of points into the point of whether or not we could see a market correction, because I think that's the thing that kind of looms in on this. And the thing that we all have to be cognizant of is if the SEC were to actually spoil this and put a denial in, what kind of impact would that have on the market over the next 2 to 3 months? I think that's the question mark that we'll all be facing here. Okay, so if you're thinking about when and if we get this as an early present for 2024, Tarot here kind of chimes in on this, saying there's too much pressure on the SEC, pretty much pushes it into early next week, which is still the date that I think a lot of people have earmarked, is this January 8th date, which would give the SEC the 4 days this week to deal with this, obviously some catch up, and at the same time hitting the markets with a good timing release if they want to look like they've done something positive for the markets in general. I think that could be waiting till the last minute. I don't know. I think that still would look badly on the SEC. Another tweet kind of getting into this. This is kind of talking about BlackRock and JP Morgan also instructing staff to be prepared for spot Bitcoin ETF approval imminently. And of course, post-approval, the expectations for sales inflows to be opened up by the end of January. This, I think, is really going to start to move. I think it's going to start moving the needle because there's, this is a thing that I get a chance to talk to a lot of different people in the investment community. And one of the things, especially on the investment advisors that I've talked to, is that the question mark has been how much of the portfolio is going to be looking at shifting into alternative assets like Bitcoin. Based on what they're seeing so far, and again, remember, the kind of performance that Bitcoin and other crypto assets have had in the last 12 months, people are starting to edge off of that 1%. I think that will be the big factor as to whether or not this shows much more bullish going in toward the end of January. So maybe that's the time. Also, Bitcoin flipped Meta in market cap. So another monster here of the big seven, now getting flipped, of course, by Bitcoin as an overall market cap. And I think this is going to end up being one of those things that really is not necessarily that important. But the point is that, if you think about where Meta has come in the last year, absolute skyrocket in terms of performance. So I want to jump to a quick clip here. And this will get into a little bit more of a detail around some of the Coinbase team talking about if this is really a big deal or not. Listen in.
So this Bitcoin ETF, spot ETF for the U.S. markets, really as foundational and as big a deal as people are making it out to be. It's a structural market change for this asset class that's coming into its being. The noise and chatter around sort of this approval is certainly intensifying, and we'll see how things play out. But the way we see it is that there's going to be secular demand and funds flows that are going to be coming into this asset class and this asset in particular. And then when you couple that with the halving that's coming up, which will reduce the block subsidy that's on the supply side by half, those two factors will, I think, combine together to be pretty explosive. I think one thing that's I think reported on as but is really interesting that's happening behind the scenes as well is that Bitcoin's transaction fees are also at a relative high since 2020, and that's because the demand for Bitcoin block space has actually gone up in the last year because of these things like inscriptions and ordinals, which is kind of happening on the crypto native side. But what it will effectively do is it is providing additional miner revenue and additional security for the long-term future of the Bitcoin blockchain.
All right, so I thought that was interesting, the fact that we had ordinals now on mainstream CNBC. Trying to explain that to the layman might be a little bit more difficult. So the fact that they talked about it was kind of interesting there. I do want to get into a couple of things here, and that is the chart on Bitcoin. If you look at the movement that occurred, this was somewhat telegraphed here. If you look at the money flow here on the Lux Algo chart, of the money flow starting to basically vacate right there on Monday, coming in, and I'm on the 4 hour, so it showed the Monday painting out two big green candles, and of course the overnight candle really starting to show some consistency, and then money flow, of course, coming out slightly there. Didn't really get much of a good move right here. And if you look at this compared to what we've been tracking on just the sentiment data, very erratic right now on Bitcoin. So I think this is one of those things that we're probably going to see another market correction before the date, if in fact it does happen next week. So I think we're going to see some sideways action here for a little bit. Here's another good tweet. Bitcoin saga illustrates how slow and inefficient the regulatory system is. One lesson particularly stand out to me: people tend to overestimate how much can be done in a year. I would agree, because I think a lot of people, including myself, I felt like we were going to see some regulatory movement. Now, at the same time, and sometimes you just fall for these things, you want the regulators to show that they're actually doing something, and they get all, jazzed up, and that's kind of what happened the last half of last year. Tom Emmer came in, Patrick McHenry, a whole slew of regulators really amplifying this, moving into what I think now is a political agenda, which is the sovereignty of our own financial system. But the fact that it, again, let us down at the end of the day, I think that also kind of brings us back home to a reality, and that is, are we going to get regulation in the front half of 2024, or is it going to be much further and maybe not in 2024 at all? Love to get you guys' feedback. I want to go to another clip here by the Coinbase team, because this gets into a little bit more about whether or not you need clear regulation for what's happening on Wall Street right now. Listen in.
Although in the U.S. the regulatory conversation is still evolving, but the fact that despite that, this ETF is starting to come into its being and the SEC is making way for it, signals that just the demand and the weight that's being put behind this asset class is too loud to ignore now. And what it does is it further destigmatizes and legitimizes sort of this asset class by providing kind of a familiar and compliant channel for these asset managers and allocators to be able to access this asset.
All right, so that of course is the team over at Coinbase. I think this guy is director of Coinbase Singapore. But the point being is that we're starting to see a lot in the way of people accepting what could happen with the ETF actually coming of age. And that is the pure and simple scenario of institutional money starting to find its way into blockchain and crypto for the first time. So I think everybody's kind of looking on. This will be a big rug pull if Gensler does not approve this ETF. Here's, speaking of the ETF, Eric Balchunas here. New Grayscale amendment just dropped. Clear language on cash only, but no AP named. This is weird. Why would they not name an AP just a few days away from this? And he's pretty sure, the fact that they couldn't see it, that they had kind of left this wide open with a lot of just unknowns within this. So I don't know if this looks good for Grayscale, or Grayscale is just going to, kind of accept defeat in the sense of maybe not going out on this first round. I don't know. This is a very unusual situation. Another tweet right here by Nate. Coming in, quick inventory currently just goes spot Bitcoin ETF fees. This one was interesting too, because we showed this last week a little bit, and that was the movement of Fidelity had went in really aggressive on fees. And you've heard me talk about this a couple of times, guys. Whoever wins this fee war, I think, first of all, this is good for Coinbase's stock, I believe, because we're going to see Coinbase, if Coinbase counters with lower fees, to be able to maintain. They don't have to match. I don't think this is the same kind of investor. But the fact that if they can come in with some lower fees, they could really draw up into, I think, a large movement of new investors coming in who do want direct access to all crypto, including Bitcoin. But for those who are going to go through the ETFs, Invesco Galaxy comes in at 0 for the first 6 months, up to $5 billion in assets under management. So that's a big statement. Then they're going to go to 59 thereafter. But Fidelity, rock solid at 0.39. Based on these fees, unless BlackRock comes in with something very attractive, Fidelity could win this space. And they're one of the three that we have as the leader. Fidelity, 21 shares, BlackRock, those are the three we're looking at as being the leader for the ETF. Eric, again, kind of one of the biggest unknowns left in the saga would be what BlackRock's fee is. And of course, we don't know. But he's going with around 4.7. And that would be just above the Fidelity rate, below the 21 shares rate. I don't know if that would do it for me. I think Fidelity would still win this, regardless that BlackRock might have the bigger, even though the BlackRock has such a access to a Rolodex of main investment advisors that really could move this. So they could actually win that out for sure. All right, so another topic I want to hit on, Bitcoin spot ETF approvals. Most likely to sell the news. This is a few people jumping in on this. And I think this is the real question mark right now as to whether or not the markets will respond dramatically, softly, or not at all. This is I think the situation. And really, if you're in Bitcoin for a long haul, which I think most of our audience probably is, probably doesn't matter that much, because you're looking at toward the end of the year, the recovery to take place, a couple of rate cuts to happen, things like that. But everything points toward right now being considerably exposed ahead of the verdict, with derivatives pushing to a massive premium following obviously the movement we saw over the last 3 months of continuous upside. And Lund, the analyst here, put a probability to sell the new scenario at 75% versus 20 on chance of approval. So basically, people are going to see some selling pressure. That could take us up for a short period of time, much like, is this going to be the last pump to 45K before we start to see this correction coming down, selling prior to the actual ETF approval? Let me know what you guys think. Drop some comments down below. I'm going to go to this clip right here because this talks a little bit more about the Fed's transactions throughout 2024 and how the macro may play into this. Let me listen in, or you guys can listen in.
Economic risk is out there. What if we don't get a soft landing? What if it's a harder landing, more job cuts, consumer that doesn't soften but really falls? So that's one where you want to be treasuries, keep some of that cash. Geopolitical risk, I think gold still plays a role there. So we're back to 60-40, and then some other additional factors that'll help you give diversification at the margin, whether that's through alternatives or gold.
Rebecca, what do we get no landing? What happens if the US economy actually takes off? Financial conditions have loosened significantly. The labor market is still strong. Why can't this economy actually go from strength, which it in some ways delivered last year, to strength?
I think the challenge with the no landing is that the service sector would stay very strong in that scenario, which means service sector wages would stay strong. And that means the Fed can't cut interest rates nearly as much as priced in. So in that environment, you want to be hedging rates staying higher for longer. But to your point, if we have no landing and the consumer stays strong, you're going to have a lift for earnings. People are going to continue spending. And so the equity market will do well from that point of view, revenues, but they won't do well from the borrowing costs. So you just want to think about what kind of stocks you own in that environment.
All right, she hit on a couple of really good macro points here, because if we do see more pressure on the Fed, that's really what's going to have to happen to be able to see real rate cuts in terms of continuing slowing of the jobless, or increase of the jobless claims, but slowing of the job market. But the other, scenario she painted out here is if we do get into a no landing, I think that's the worst, because one, it will extend out the jobs, most likely at, like she was mentioning, the service sector, which really is hospitality more so than any. And it also would slow the response of the Fed, because the Fed's not going to see jobs there, and that means higher for longer. And that's not good for business. It's not good for business in the sense that access to capital is going to be stronger or less strong. And the problem there, even though earnings might lift because we're going to see consumer spending, I don't think that's going to be the case. I think our situation is consumer spending has continued to slow. And as long as we see consumer spending slowing, which I still think has a lot to do with what's happening in the credit markets, that's the only way that we can spin this. And you have to also remember, people, there's an election coming. And this cannot be a situation where the economy does not get that jettison of what has been happening for the last couple of years, and an opportunity to basically stimulate what could be going into next year's presidential election. So I'm kind of on the sense that we're going to see more downtrends on labor, and we're going to see more downtrend on consumer spending, which will only give the Fed the ability to come off of those rates. And at that time, now you have a responding, securities market and, of course, crypto market, and it plays into Biden's hand and the Democrats for an election. Last up here is the dump watcher. U.S., and this is kind of an interesting analysis as well. Let me kind of zoom in on that for you guys. 1 month T-bills yields skyrocketed 13% in a day, just as Bitcoin prices have shot up at the same time. Short term spikes usually sign of a financial entity blowing up. Now, remember, T-bills, people getting out of T-bills, so yields go up to draw people back into T-bills. much like what you see in general money markets. So where is this yield, or where is this liquid going? It's going into some of these alternatives, and also what we've seen not only in the S&P. S&P has been continued to fly, but also into the crypto markets, which I think are the opportunity here, maybe for short term, but I'm looking more in long term. When I say long term, meaning Q1, 2, and 3 of this year. Everything is still hinging on these rate cuts, and I think that is more important to pay attention to than anything. All right, so we're going to continue to break this down for you guys. We are going to be doing a video that we promised last week for our 2024 gaming tokens and some of the breakout projects that could really lead this correction in the crypto markets of seeing a massive bull run coming up ahead of us. So we'll break that down for you guys. Make sure and subscribe to the channel right now. If you're not in the Diamond Circle, get in. It's really easy. Click the link down below. Follow me on X. It's @PaulBaron. Catch you next time right here on TechPath.